What are some ways that business owners can minimize taxes? This is one of my favorite topics because you can live corporate life. Now, if you haven't been to a Millionaire Intensive, we're going to start right out the gate with some gifts. I want you to grab 2 tickets to our Millionaire Intensive in the show notes below. When we teach you to live corporate life, it's how you get to make the absolute maximum deductions to minimize your taxes. So when you first start out to live corporate life, you've got to have the right corporate structure. And I'm going to first go through, once you have a basic corporate structure, what is just some of the basic business expenses that still today CPAs are lost. They'll say, oh, if you take a home office deduction or a wardrobe deduction or certain kinds of deductions, you're going to end up in an audit. Not true. That's a very old school conversation. Decades ago, they got way bigger things to talk about in today's audits. You want to structure the way you make money. Again, companies make money, individuals get taxed. So as we go through that, I'm going to describe that and discuss that thoroughly with you. I call it forecasting forward, not budgeting. So it's basically taking, how do you take your personal expenses and legally make them business deductions? And last, I'm going to talk about some advanced strategies that the wealthy use. So get a pen and paper. This one's important for almost all of you. So number one, how do you turn expenses, personal expenses into deductions? You've got to get incorporated. You cannot stay a sole proprietor. I mean, you can, but that's going to get you a Schedule C of maybe up to 33 deductions. Not a lot, not worth it. Just get incorporated, get committed, jump, just do it. So you're either going to be in the United States, a limited partnership, an LLC or an S Corp as a pass-through, which is usually a beginning company. Some of you may need a C corporation, but again, that has to be evaluated by a corporate team. Now, if you want to talk to our team at any point, go to askloral.com, ask a question, make a request specifically about what you want to talk about, and I will get the answers back out to you. And if you want someone to evaluate how we could help you, just do the gap analysis. It's in the show notes below again. It's like where you are, where you want to be, and what you think you could do for a plan, because we know we can see those problems and those gaps quite clearly. But as you really get incorporated by a specialized team who actually knows what they're doing, that is based in a tax plan for you. Those are the 2 variables. A lot of you go to the Secretary of State and you just get a basic entity, or go to LegalZoom and go click, click, click. It's not the company you needed because it doesn't affect the tax strategy. The problem with those kind of sites is they're just going to give you the entity. Then what? There's no tax person to actually have a conversation with to say, what can I take in deductions? So a lot of the beginning deductions are things like your phone, a vehicle expense, an office expense, any technical expenses. If you're doing, like I do a lot of YouTube and social media, all of the stuff in the studio is all deductible. So what can you deduct? Can you employ your children? I'm going to say, yes, you can. You've got to be creative. How do you take your vacations, make them business trips? All of these are deductions that are legal, done right through corporate structure and corporate minutes. A couple that people forget all the time is past equipment you might have bought. What can you deduct in that category? Also, just research and development. R&D is hugely overlooked and missed. And now with the real estate, the bonus depreciation that came out of the Big Beautiful Bill, which is now Big Beautiful Law, also in effect in 2025, and a whole nother body of that law and changes are coming in 2026. So again, you want a tax team that pays attention and will forecast forward and move those expenses aggressively and legally into business deductions. Second thing is how you pay yourself. So once you get yourself corporately structured and you have a company, you're either going to do 1 of 2 things to get it to make money. Actually, 1 of 3 things. Number 1, go make some money, make some sales, and it actually has money. If it doesn't, you're going to either loan it money or you're going to give it money and as a buy-in on a shareholder, as a shareholder to that company. So there's 3 ways you're going to get money in the company. And then that company has money. It has its own bank account, own credit cards, and it starts paying all those bills as long as you have a legal intent to make money. So those are vital components to how you set this up. And how you pay yourself should be a really, really low W-2, because W-2 is the worst kind of money because you are going to make it as a W-2, you're going to get taxed right away, and then you get to spend what's left. If you make it as an entrepreneur instead of a company, you make the money, you get to activate the greatest, largest 81,000+ pages of tax code, then you pay tax. So you choose your tax plan. It's not chosen for you. A lot of you say, well, I just need to be a W-2, and you can have an operating agreement. So before I go on and finish this up, because it's one of my favorite topics ever, I would always say, subscribe to this channel, click that notification button. So every morning, 5 days a week, we are here with new content. It's a family-friendly channel, 5 years old and up, absolutely can thrive in this. Make sure you and your family go to my Millionaire Intensive. We have 3 more this year. I'm filming this at the end of September 2025. So we have 3 more that are all-day events, very comprehensive. And as we head into 2026, we're going to change it up a little bit and really dive deeper into corporate life and tax strategy, legacy planning. We're going to have a whole nother day that's just going to be on how do you make money in marketplace. So we're going to carve it up a little bit to get some of the specifics of what you need instead of one big comprehensive day. Let's get a little more specialized for those of you who have things and need things. So make sure that, again, you click that notification button, be here every day, and make sure you take advantage of those tickets. Now, last thing I want to talk about, the strategies for the wealthy. So what do the wealthy do to get below, even in a C Corp, that 21%? They have multiple corporate strategies, and they don't like make a domino where the C owns the S and owns the LLC. So it's not a domino. It's actually more of a, I call it a trifecta. So the companies each have their own thing to do, their own reason to make money. They have their own deduction schedules, and they're all held in trust. So now you avoid probate. You have a very, very, I'd say, asset, proof and liability proof structure to your entire family legacy. And the way that wealthy people invest is vital to their tax plan. First of all, most people don't even think about taxes as something they need to plan for. They just go through their year, hand their CPA their big box of stuff, and their historian, their CPA, goes and says, all right, you owe this in taxes or you're going to get a refund. Because most of you that are overpaying as an employee will probably get a little bit of a refund. If you're an entrepreneur, it's the other way around. Why get a refund? Why overpay in the first place? So the strategy is you make money, maximize the deductions, and then invest in things like energy, which is gas and oil, which has one of the greatest depreciation schedules, real estate with the bonus depreciation. You can look at aviation. There's a lot of things. You can start carbon credits. You can look solar. There's so many things you can invest in that actually affect your tax in the bottom line. So a tax strategist should be leading, not you. And our tax teams, they've gone to school for as much as most surgeons in the world have. So you don't do your own surgery. Why are you doing your own taxes? Stop it. And go to askloral.com, ASKLORAL. Let us help you have a better tax plan, a real tax plan for once, and forecast forward with our team. Ask questions, make requests at that Ask Loral site. We'll be back tomorrow.